Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben. How are you?
Good morning, Will. I'm doing fine. I'm doing great. So,
Ben and I were just chatting a second ago. Ben, you're working on some golf mechanics. How's that been going for you?
hmm, I have the wounds. I don't know if the audience can see it, but I've got a couple of blisters that even though I had golf gloves, I've just been hitting that many golf balls trying to work, on my drive. And I would say I've got it down to where I can get it to go straight now, but it's just not going as far as I would like it to go. So we'll get there. We'll get
Yeah,
there.
yeah. So anytime I hit the ball straight, it tends to go straight into the ground. So maybe not the most gifted when it comes to golf, but hopefully we can make some positive adjustments there. Unfortunately, for the week, looking at the commodity markets, we had mostly negative adjustments. So a quick rundown update of the prices here. Corn for September down 22 cents at 482. December 23 corn down 18 cents at 495. Soybeans for September 23 down 22 cents at 1348. Those November 23 soybeans down 29 cents at 1302. Soybean oil for September was up 1 cent at 64.08 cents for or per pound there. Soybean meal by the short ton was down $4.60 at 419.20. Wheat for September 23 down 8 cents at 657. July wheat for that 2024 crop up 45 cents at 736. And then crude oil for September down 22 cents at 81.66. So Ben, crude oil finally coming down just a little bit there. Some light losses throughout most of the complex. What are your initial thoughts?
Yeah, essentially picked out crude oil just to say, yeah, so we're finding some equilibrium here, maybe around 80, $81 a barrel. That's quite a bit higher. That's $10 a barrel higher than where, the US government and really a lot of industry players in the US would like to see it. The expectation was around $70 a barrel, and we did get there, and we were there for quite a while, but now we're starting to creep back up again as players around the world have made production cuts. On the grain and oilseed side, we've seen kind of this sell off across the board, the lower prices. That's two functions here, really. It's a needed and beneficial rains across the majority of the country. Maybe not rains enough to pull the crop out of despair in some regions, but certainly helpful to regions that we were in a good growing point for added pod fill or kernels. And so I look at that and say, okay, the rain seems to be having an impact, but I also think it's just this continuing lingering question of demand. As we think about, okay, it looks like we're going to have some supply. Private estimates certainly are suggesting that we're going to have some supply. Well, let's take a look at the demand side, and the demand side is still pretty bearish. So I think all those functions are we're starting to work down that weather premium.
So talking about the expectation of having some supply, we're seeing some I guess mixed action when it comes to crop conditions week over week. Looking at what's going on at USDA, but Ben, I want to talk about some private estimates that are coming out here, what you might call midsummer, looking forward toward this harvest season. Where are you seeing these private estimates kind of fall in line with?
Sure, sure. So yeah, first of the month, starting in August, is when a lot of private firms start to release their own estimates, and it's a mixture of different sources. I always encourage people before you get totally crazy with thinking about numbers, look at how they're doing their methodology. Is it just a pure survey? Is it based on walking fields and going out and getting objective field data? Um, so at this point, a lot of these private companies are just using customer survey data, and then maybe some of their own employees. And we certainly saw, I think, a surprise to the market last week when a couple of these private firms released national corn yield estimates at 177 bushels, or around 177 bushels to the acre. That's down a half a bushel from where USDA was in July, but certainly I think higher than where a lot of market participants would have pegged it. Even myself, I've got a corn yield estimate somewhere around 175 bushels to the acre. And so I think that was a surprise. On the soybean side, again, we're seeing private estimates come in anywhere between 50 and 51 bushels to the acre. That's down from USDA's July estimate of 52 bushels per acre. So a little bit softer than USDA in both commodities, but certainly I think higher than where many traders and market observers had pegged this US crop. As a reminder, this coming Friday, so it's a survey-based yield. We'll get that coming out on Friday.
Ben, can you just give a recap right there when you said coming up Friday? I think the Zoom froze up just briefly.
Yeah. So as a reminder, on Friday, we're going to get USDA's first, survey yield for US corn and soybeans. They used to do a objective field survey in August. They no longer do the field survey, go out and walk the fields, but they still do a producer survey in August, and we'll get that data point coming on Friday.
So, Ben, you talk about the estimates, those private estimates for corn coming in above 175 bushels the acre, soybeans, around that 55 mark. How much, I guess, heavy lifting are we going to have to see some of these weather patterns do in the next several weeks to really get to these marks?
Yeah, and so you said 55 bushel soybeans. I'm gonna just pause there because I don't want the markets to go crazy. I don't know if market observers watch us, but 50.5. That way, if
My mistake, I misheard you there. Yep.
yeah, that way if the market drops $2, it's not our fault, right? I just want that clear. So your question I think is valid, right? Like how much weight does August yield estimates play in the broader spectrum here? I think for corn, it matters a lot. I think this initial USDA corn survey number that we're going to get here in August, traditionally it hasn't been that far off, bearing a big disaster, right? The one exception in recent memory would have been, I believe it was 2019. USDA had surveyed farmers in early August. They released their yield in mid-August, but between when they surveyed producers and when they released their number, we had that big derecho in Iowa, right? Like that's one instance where we had to then wait till September to kind of get a better impression of what the crop looked like. But I think for August, these USDA numbers on Friday usually are pretty close to where we end up at for the end of the year. Maybe a bushel or two in either direction, but pretty darn close. And so if USDA comes out with 177, I think that's just reaffirming what a lot of these private companies are saying. If they come in at 175, history would tell us that, eventually private market surveys start trending that way too, down the line. And I'm not saying that the private surveys are wrong. I'm just saying that's traditionally what has happened, we end up closer to USDA at the end of the cycle.
So, Ben, you kind of teased the upcoming supply and demand estimate coming from USDA. Maybe some increase on the supply side for this cycle. How do you expect that to impact carryout, and what's the general picture on the global stocks?
Yeah, so I'll start with corn here, not because corn has the bigger story to tell. I think they are all pretty equal, but I'll just start with corn because I think we could see actually some slightly increasing stocks for that old crop corn picture. Exports have continued to taper off here down the stretch. We're digging ourselves into a hole with just a few weeks left in the marketing year that ends at the end of the month. And so I do think that USDA might go ahead and raise exports, lower exports another 15 million bushels. Of course, that carries through to the end and raises ending stocks. They also could wait till the end of the marketing year and kind of do one final adjustment. And that's typical. Like it could go either way. So I'm not sure we're going to see the adjustment in this report, but I do expect at some point USDA will lower corn exports and raise ending stocks for the current year. On the new crop side, growing ending stocks. A couple of reasons for that. One, production rebounds, right? If the market's right and we're trading 176, 177 bushels to the acre, which is kind of where the mindset's starting to go on the corn side, that gets us a production value that is significantly higher than we were last year, and an ending stocks number that's about 750 million bushels higher year over year, right? So that's an extra 750 million bushels in that cushion that we didn't have all the while I think USDA is still too aggressive on next year's export volumes. So I sit here and say the market reaction to the downside seems to match the impression. It's just what's led us to today is, would the crop be there? The feeling is now starting to be that the crop's going to be there. I'm not sure I'm still sold. And I've got a little bit of my backyard bias here, because Missouri is arguably one of the worst, hit states this year on corn production. And we could be looking at a, 140 Missouri corn average in 2023. So I've got a little bit of tendency there, but I certainly think it could drag the national yield down a little bit.
All right, Ben, I want to wind down today talking about everybody's favorite topic, the very strange export markets that we've been seeing for the last, however long you want to set an arbitrary period. But we've been seeing some commotion on the global stage again, looking at the Black Sea region. You're seeing Ukraine pressure Russia with advances on Russian ports now. So that's maybe shifted that dynamic into impacting Russia's ability to move product and move grain supply. So I guess kind of related to that, where do you see the U.S. export market sitting after a week where corn was a little bit down and soybeans was a little bit up?
That's, I think that's kind of my expectation on lower prices. It peaks some purchases again, maybe out of the Chinese market. If you look at this last week, we didn't ship any corn to China. We didn't ship hardly any soybeans to China for the most recent week. Now, those are shipments. On the sales side, we have seen a little bit more activity. We've seen some flash sales to the Chinese market, some flash sales to the Mexico market. And I certainly think we're going to continue to see that. I think they're interested in buying our corn because for, let's just say the last 8 months, the world has largely mitigated the challenges in Ukraine by Russia flooding the market with lots of cheap wheat and Brazil flooding the market with lots of cheap corn. Those two factors, well, the Brazilian corn is still a thing, right? Like that's still happening. Brazil's still supplying the world with lots of corn. Your comment about, now we're seeing Russia or Ukraine kind of go on the offensive and attack Russia, that starts to threaten that cheap supply of wheat that Russia has been providing to the market. So I do think maybe we see some players, China being one, that comes in and buys some of our corn and wheat markets here at some of these lower prices and gives us kind of a floor to work with for a period of time. I don't know if it's going to be all that long, but I certainly think that it'll provide a little bit of support for a period of time.
All right, Ben, looking ahead to the rest of this week, we already highlighted one of the things that people should be paying attention to with USDA supply and demand estimates, the WASDE report. What else should farmers and ranchers be paying attention to?
Yeah, so on Thursday, the 10th, we do get June's ag trade data. It's not a huge market moving report, but I think it's a nice benchmark of kind of the volume and values that we traded products around the globe. So that comes out from the Census Bureau on Thursday at 2:00. Like I said, not a huge market moving report, but a nice benchmark for the year. The other thing that I'll just add real quick, we did get land values last week. Of course, at the end of the month, we'll get county level cash rents. But we did see land values up, 7% nationwide. Multi-states were double digits. And I think part of that is some of the rally that we've seen in commodity markets over the last 2 years. So just wanted to throw that in there. We didn't touch on that, but thought it was
always something of interest. Yep. All right, Ben. Well, I appreciate your time this week. Viewers, listeners, if you'd like to know more about what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.